Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit of technical analysis on Bitcoin and the cryptocurrency markets, and more specifically, we're also going to be talking about this nice little pump that we've seen Bitcoin pull off here over the last 12 hours or so. Now, back in 2017, the $70 price movement wouldn't have been that big of a deal. That would be what Bitcoin would do while you would go out for lunch, but lately that's a big deal, and right now what we've seen is we saw Bitcoin move about $70, starting at $6,400, running all the way up to about $6,472 before losing about half of that price action overnight. And the reason that's significant is because that's a break of the long-term downtrend of resistance in the long-term descending triangle pattern. But there's a problem here. And the problem is that we've seen Bitcoin do this a couple of times now. We've seen Bitcoin break this long-term downtrend of resistance. We saw it happen right over here. If you redraw the downtrend like this, as you can see, we broke it right over here to pretty much no avail. And I believe that's exactly what we've seen happen here again. We've seen Bitcoin break this long-term downtrend of resistance, but not have any follow-through, which really just means that we've just reset what the downtrend of resistance looks like, which also means that we're going to continue trading sideways for a little while. So that kind of leads us into the question at the title of today's video. How much longer is Bitcoin going to just be trading sideways for? Because I don't know about you guys, Bitcoin trading sideways and basically turning into a stable coin for the last month and a half or so, getting a little boring. I'll be honest, it's getting a little boring, and I'm kind of interested to see Bitcoin do some stuff, and I know you guys are also, so that's what we're going to be discussing in today's video. So without much further ado, let's go ahead and get right into it. Like I said, Bitcoin ran up to around $6,472 or so last night, and we've lost about half of that price action, a little over that. We're down here trading around $6,425 at the moment. We're going to keep going with the Bitcoin technical analysis, but let's go ahead and jump on over to CoinMarketCap and do the crypto market recap. As we can see, if we look at the conglomerated, the put together price action of Bitcoin across all exchanges, the average price action, that's the word I was looking for, of Bitcoin across all exchanges, Bitcoin is currently trading just a little bit under $6,500. That's starting to come back down to where it should be, which is in alignment with the Coinbase chart. And the big reason for that is because of US dollar tether. As we can see down here, US dollar tether is still not trading under $1. It doesn't seem like US dollar tether really wants to recover and get back to the $1 that it's supposed to be at. Perhaps that's a trust issue in the tether community after we saw that massive dump. Give it a couple weeks, that'll probably repair itself. We'll see what happens. Time will tell on that. But for the time being, CoinMarketCap and Coinbase still disagree on what Bitcoin's price action is. Bitcoin is up around 0.42%, the answer to life, universe, and everything over the last 24 hours. But like I said, that hasn't really brought very many results, because if we were going to break this long-term downtrend of resistance in the way we would have liked to have seen, Bitcoin would be up like 42% right now. Not really, but we'd see Bitcoin up quite a bit more than 0.42% if we actually broke that long-term downtrend of resistance, considering that downtrend of resistance has been a key level of resistance for pretty much the entire year of 2018. That's a very major level of resistance. That's this downtrend of resistance. By no stretch of the imagination is that insignificant. And if we did actually see a proper break of that, a confirmed rally forming from that, we would see more price action than that. But overall, the cryptocurrency market is doing pretty well. We see the only two losers in the top 10 are Stellar and Tether. Tether doesn't really count because Tether is the Tether is the black sheep of cryptocurrencies. That's what Tether is. But anyway, if we sort by change over the last 24 hours here, we're going to see MobileGo is actually doing pretty well with 16%. We're not going to get into it today, but MobileGo did have some news come out yesterday. If you guys are interested in that, if you join the Discord server and you go to the hashtag Auto News tab, the text channel, then we have a bot that automatically posts news. And I'm pretty sure the bot posts some news based on MobileGo and why it's up about 16% here over the last 24 hours or so. I believe it has something to do with a partnership. Anyway, if we scroll down here on CoinMarketCap, what we're going to see is that overall the market is green. We see more green than we do red, although there is definitely a considerable amount of red. Dogecoin is down by 7%. That is a crying shame. Dogecoin is the best cryptocurrency, guys. I don't know about you, but I love me some Dogecoin. I remember when Dogecoin was worth over $1 billion back in 2017, and it's kind of that's the epitome of Bitcoin and cryptocurrencies right there. When a meme cryptocurrency that wasn't even necessarily started to be a serious cryptocurrency is worth $1 billion. That's basically cryptocurrency in a nutshell. Tell me in the comment section down below if you agree with that sentiment. That's basically this entire community, guys. That's by no means an attack. I love that part of crypto. Anyway, I think that's all we wanted to talk about here on CoinMarketCap. Bitcoin's daily volume is one thing we wanted to talk about, actually, because like I said, we saw this breakout above this long-term descending triangle pattern's downtrend of resistance, and we didn't see a major breakout. If we did see a major breakout, we would see a lot of volume coming into the market, and as you can see, that is not exactly what we saw. We saw basically no volume here over the last 12 hours, and that shows up right here when we're only looking at $3.5 billion of daily trading volume for Bitcoin. That's not indicative of an actual major breakout, and that's what we're going to be discussing in today's video. So let's go ahead and keep analyzing this little scare quotes breakout that we're looking at right now, because that's exactly what it is not. We saw Bitcoin break out. Like I said, I'm going to use breakout because it's this little pump. Let's call it a pump. We saw Bitcoin have this little pump right up here, breaking through where this downtrend of resistance was just a little over 14 hours ago or so, just a little over 12 hours ago even, and we saw Bitcoin do that. And what we saw is Bitcoin ran from around $6,400 to around $6,470. We lost a lot of that price action. And like I said earlier, the two things that we want to take away from that is that, one, Bitcoin had an opportunity to break this downtrend of resistance because, well, we broke it, but we didn't get any follow through from it. Part of the reason for that is because it happened late at night. I believe this happened around, let's see, it happened around 11 o'clock at night Eastern Standard Time where I am, which means most of the United States missed this, and the United States does make up a considerable portion of the cryptocurrency community, so getting this pump to actually move may have been problematic because of that. But another thing that we saw is just that the bears were stronger. The bulls were not strong enough. Now, what it seems to be is that the bulls and the bears are almost perfectly evenly matched, and we're going to be building into that in just a second. But that is actually kind of interesting because of, like I said, what we're about to talk about in a second. But there's a few more things I want to get to before that, and one of them shows up on the daily chart to do with Heiken Ashi. Now, you guys probably know by now that I'm a fan of Heiken Ashi. In the Cryptocurrency Technical Analysis Academy, link in the description, we have a whole video dedicated to Heiken Ashi and how you can use it with a couple of other indicators. And I am a big fan of Heiken Ashi, and one of the ways that you can use it is not only determining when Bitcoin is in a series of uptrends and downtrends, but also determining when Bitcoin is properly trading sideways. Now, don't get me wrong, it's pretty easy to tell when a market is trading sideways, but if you really want confirmation for it, you need to look no further than Heiken Ashi, because as we can see right here, what Heiken Ashi has been doing, and like I said, I can't get into how Heiken Ashi works right now. The Cryptocurrency Technical Analysis Academy goes over that, but the point with Heiken Ashi is that when the market is green, typically that's indicative of a rally, and when the market is red, typically that's indicative of a downtrend. And what we see here is that the Heiken Ashi candlesticks, instead of basic candlesticks, the normal candles, has been changing from red to green to red to green to red to green to red to green a lot lately. And what you see when that happens is that's very indicative of the market not really having a direction and basically trading sideways, which also means that the bulls and the bears are probably pretty evenly matched. And that's not really something that we've seen lately. We've seen the bulls be strong for 2 or 3 weeks, then we see the bears be strong for 2 or 3 weeks. As we zoom out here, we see a lot of green in a row, right over here, for example, right over here, for example. Those were sustained bull rallies, and we see a lot of red in a row right over here where we see prolonged downtrends, and that's not what we've been seeing lately because, like I've talked about in other videos, volatility's been dropping off, volume's been dropping off, interest in the space has been dropping off, and we're transitioning from a bear market into an accumulation phase, and that's what I want to discuss in this video, because the price action that we've seen come here over the last 12 hours or so, and also the price action that we've seen come here over the last 45 days or so, is very indicative of this, guys. One of the things that we're looking at here is the gradual transition from a bear market into an accumulation phase. So actually, you guys call me a permabull. You're probably about to call me a permabull, permabull again because of what I'm about to say. Because what I'm about to say is that what we're seeing with Bitcoin not having a major breakout of this is not necessarily the best course of action. We would like to see Bitcoin have a bigger breakout from this, but it's also not really a bad thing, because let me tell you what I interpret this as. Let me tell you what I think this means right here, where we saw this breakout above this long-term descending triangle patterns, downtrend of resistance, and we didn't see a major bull rally to follow. What that's indicative to me is that we are, in fact, in an accumulation phase. That's not confirmation of bullish price action or bearish price action. I would say that's confirmation of an accumulation phase, because if we were going to see the bulls take over, Bitcoin would be trading at like $6,800 right now if we saw a proper breakout here. If the bears were able to take over, they would have taken this red candlestick and ran with it all the way down to $6,300 or lower. Bitcoin is very clearly, in my opinion, in an accumulation phase at this point, and that's actually a very good thing. And let me tell you why that's a very good thing. Let's go back to the Coinbase chart. That is a very good thing, and the reason I believe it's a very good thing is because what have we talked about on the channel many times, guys? Well, when you see a bear market end, how does a bear market end? A bear market ends in a whimper, and a bull market ends in a roar. And right now what we're seeing is we're seeing the market whimper. We're seeing Bitcoin turn into a stable coin and trade sideways, as it has been for over a month now. And what you see at the end of bear markets is you see volatility drop off, you see volume drop off, you see the Bollinger Bands constrict, and you see the market overall get a lot tighter and not move as much. And what everything that we're looking at here over the last couple of weeks is telling me is that in fact all of the signs of Bitcoin being in a bear market are now drying up, and all the signs are now pointing to us being into an accumulation phase, which is a good thing because you need to enter an accumulation phase normally before you enter a bull market. So that's where I think we are now, guys. I think what we've seen over the last 12 hours or so is indicative of that, and I also think that based on everything we've looked at here over the last couple of months that we are now well into an accumulation phase. Before we wrap the video up, let me go ahead and address some of the opinions in the cryptocurrency space. I see a lot of people saying, well, we need one last dump. And one thing I want to talk about is that a lot of people say that, for example, we're not in an accumulation phase. We're still in the bear market. We're just very deep into this descending triangle pattern, and we're going to see Bitcoin break bearish and move much lower. Now, while that is very much a possibility, I'm not discounting that possibility in the slightest. I think there's a very strong minority chance of that happening. Maybe a 20 or 30, maybe 35% chance of that happening. I still don't think that's what's most likely, but it is very possible that Bitcoin pulls down to $3,000 or to around $4,000 from here. Like I said, I don't think that's what's most likely. It's very possible. But let me go ahead and show you why people say that as well, because if we come back out here to the Bitfinex chart, I've made a lot of parallels between Bitcoin's current price action to Bitcoin's price action back over here in 2014 and 15. And what we saw in 2014 and 15 when my chart decides to load is that we saw Bitcoin was in this tight formation in a descending triangle pattern, and instead of breaking bullish out of this descending triangle pattern, Bitcoin kind of started trading sideways here. We still had some rallies and downtrends, but Bitcoin, instead of breaking the downtrend of resistance, broke the level of support at the analogous level of $300 to our $6,000, and we saw Bitcoin pull back down to around half of that, to around $160. Now, if Bitcoin were to repeat market history and do the exact same thing again, what Bitcoin would do is Bitcoin would break $6,000 and move down, towards about $3,000 to $4,000. If Bitcoin were to do the exact same thing again, we would see Bitcoin move down to around $3,000 to $4,000. I don't think that's going to happen, and let me explain exactly why. I do think we are going to break the long-term downtrend of resistance, either by breaking bullish out of it or just by trading sideways for so long that it's no longer valid. I don't think we're going to break bearish, and there's a couple reasons why. One of the reasons has to do with this uptrend of support that Bitcoin is above right now. This right here is a big factor because this shows that Bitcoin has been making higher lows consecutively for the last 3 months or so, a little over that, about almost 4 months now at this point. Bitcoin's been consecutively making higher lows. Not only do we have that, because we've been making higher lows, we also haven't come down here and tested $6,000 in the same way the market was sitting over here and riding on this level over here. We saw Bitcoin come down here and test this level once, twice, thrice, and then we broke it, and that's how we saw the break of it. Bitcoin has not been testing $6,000 lately. Instead, it's been testing this long-term downtrend of resistance. And that's telling because what I've talked about on the channel before, and what is one of the most fundamental pieces of technical analysis when it refers to support and resistance levels, is that the more times that you test a level of support or resistance, the more likely you are to break it. And what level are we testing a lot? We're not testing $6,000 a lot. We're testing this long-term downtrend of resistance a lot. I do think that's why we're going to break that. I do think that's one of the reasons why we're going to break it. Let me give you another one. Another thing that we saw happen in 2014 is we saw a ton of bearish news, guys. You see this big gigantic candlestick, this gigantic wick over here about February the 8th of 2014. Yeah, that was right around the time that Mt. Gox got hacked, the exchange that was controlling 80% of Bitcoin in circulation, and a bunch of Bitcoin went missing, guys. There was a massive reason for the 2014 bear market to happen, and actually the bear market already started, but it definitely got exacerbated by the Mt. Gox attack. Let's go ahead and I can show you the Mt. Gox chart right here to give you an example of this if you guys aren't familiar with it. If you type in the exchange and then Bitcoin over US dollars, you can go to the exchange. Here's the Bitcoin over US dollars exchange on Mt. Gox. Yeah, that kind of puts everything in picture, doesn't it? That's what happened with the 2014 bear market, is right over here around the first part of February 2014, Mt. Gox got hacked and a ton of Bitcoin went missing, guys. Very, very bad piece of fundamental news coming into the space. Quite the opposite has been happening here in 2018. We've seen Bitcoins have a lot of fundamental positive developments. We've seen the SEC potentially turn more friendly to Bitcoin and cryptocurrencies. We see things like BAC coming. We probably are going to see that ETF coming with that SEC warming up a little bit to the cryptocurrency space. We see a lot more development not only in the Bitcoin ecosystem but also in the general cryptocurrency and blockchain ecosystem. Overall, the industry is continuing to grow. It's still on an uptrend even if Bitcoin is on a downtrend. So I do think a new bull run is inevitable, and I do think right now us being in an accumulation phase is not only not a bad thing, is perhaps I should say a good thing instead of a double negative there. Not only is it a good thing, it's actually a very good thing because it means that we are going to be entering a new bull run. Tell me in the comment section down below what you guys think of that analysis, because I know I've kind of taken one little tiny piece of price action here on Bitcoin, a little $70 move, and blown it up into an entire long-term technical analysis video, but I think it's important for us to realize what Bitcoin is doing, and we need to zoom out and get a good idea of what Bitcoin is doing so that we can know where Bitcoin is going to go in the long term. Because we don't want to just focus on intraday trading here, guys. We have to take a step back and see what the overall market is doing as well. So I hope you guys enjoyed that video. If you have, definitely consider dropping a like and hitting that subscribe button. Also, if you're interested as well, you can join the Discord server. There's a link to do so in the description down below. And if you guys want to learn how to do technical analysis in the way that I do, I teach a lot about technical analysis over in the Cryptocurrency Technical Analysis Academy. Link in the description. There's over 20 videos. Well, actually, there's 20 videos exactly right now, but there are some new videos going up in the course in a couple of days with over 5 hours of content. If you guys are interested in what's in the course, you can click the link down below and check it out before you buy it. Anyway, guys, that is going to do it for this video. I do want to thank each and every single one of you for watching as always, and I will see you guys in the next video. Peace.